In a surprising turn of events, the latest June jobs report has caused a notable shift in market expectations. No more Federal Reserve rate reductions scheduled for now, and the S&P 500 has climbed upward. The report revealed steady hiring in June with a surprising dip in unemployment, while a significant portion of new jobs came from government employment. This may primarily be due to seasonal adjustments. After this news, the S&P 500 witnessed moderate growth and the 10-year Treasury yield also rose slightly. But here's where it gets controversial. The odds of the Federal Reserve making a rate cut at their upcoming July 30th meeting dropped significantly. This shift is influenced by three key factors: the anticipated impact of Trump's tariffs on inflation, tightened immigration policies, possibly reducing labor force participation, and the fiscal advantages from the One Big Beautiful Bill Act, which supports investment and R&D. However, considering the specifics of Wall Street's response, Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics, pointed out that private payrolls, excluding healthcare and education, expanded by only 23,000, significantly lower than the 50,000 average seen over the last year. He interpreted this as indicative of a weaker report, especially highlighting the stagnation in wage growth as a sign of reduced labor market pressure. On the other hand, Eric Thiel, chief investment officer at Comerica Wealth Management, acknowledged the significant role of immigration in maintaining labor supply. He anticipates that as demographic shifts unfold, the unemployment rate could continue to drop, potentially leading to increased wage pressures. Let's dive deeper into what this means for investors and the economy. The S&P 500's slight gain appears to signal positive investor sentiment, even as Treasury yields adjust to the complexities of the labor market. But what are your thoughts? Do you believe the recent changes in the jobs report and the Fed's stance on rate cuts will have a lasting impact on the economy, or are these just temporary fluctuations? Share your perspective in the comments. For those curious about the broader impact and future stock market trends, keep an eye on how these developments might shape your investment decisions. And remember, it's always beneficial to understand the original conversations with intricate dynamics behind market movements.